Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Lennar Corporation, ticker symbol LEN, LEN. Lennar Corporation is one of America's leading home builders, so in a potential real estate recession, this may be an interesting business to take a look at. At the time of recording this video, Lennar Corporation is trading for $80.33 per share. Year to date, they're down 31% so far in 2022. That's well below what the S&P 500 has done so far this year. Over the past year, they're down 26%. Going back 3 years, however, they're up at a rate of 17% compounded annually. Over 5 years, that's 10% compounded annually. Over 10 years, that's 10.5% compounded annually. And going back 17.5 years prior to the global financial crisis, Lennar Corporation is up only 2.6% compounded annually. American home builders had this huge run-up and were in a huge bubble around that time, and that bubble clearly burst during the global financial crisis. So even despite that, since hitting their lows in November of 2008, Lennar Corporation is up more than 22 times over the past 17.5 years. It just goes to show that businesses that operate in highly cyclical markets are going to be subject to these boom and bust cycles, and it's important to have an educated guess of where that cycle could be at before making an investment decision. So Lennar Corporation is about $17.50 over their 52-week low right now, which is down over $40 from their 52-week high. About 4% of their shares outstanding are currently sold short, and they are a large business. They have about a $23 billion market cap. So for some background about the business, Lennar is the second largest public home builder in the United States. The company's home building operations target first-time, move-up, and active adult home buyers, mainly under the Lennar brand name. Lennar's financial services segment provides mortgage financing and related services to its home buyers. Miami-based Lennar is also involved in multifamily construction and has invested in numerous housing-related technology startups. In addition to this, the company is also involved in fund investment activity. Lennar Corporation was founded in 1954 and is based in Miami, Florida. So for today's fundamental analysis, we're going to be using the Select 6 analysis to give us a holistic and beginning understanding of Lennar Corporation as a business based off of their financial fundamentals. So let's get right into it. Starting off with our first metric, we want Lennar's return on capital over the past 5 years to be above 14%. So there are two reasons for this. The first is that over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are going to be captured here by return on capital. The second reason is that the average public business earns about a 7% return on capital. So by asking for a 14% threshold here to start off, we're pricing in a margin of safety in the businesses that we're looking for, that they're at least twice as good as the average publicly listed company. So Lennar Corporation had quite stable returns on capital of about 9% from 2017 until 2019. During the pandemic in 2020, their return on capital actually increased. And then we can see that they've really had high returns on capital throughout all of last year. They averaged over 20.5% returns on capital during fiscal 2021. So far this year, over the last 12 months, they've also averaged about a 24% return on capital. So this return on capital has been steadily increasing over this time, increasing in all 5 years. However, when we average this out, they're only earning about a 12% return on capital overall. So this is just below what we were looking for, and this is going to be an X to start off on our first metric. This shows us it's going to depend where Lennar is at in the housing cycle. As evidenced here during this hot real estate market, Lennar was earning a very high return on capital. In some of these other years, when things weren't as scorching hot, they were earning just a slightly above average return on capital. Next up for our second metric, we want to see 5-year growth in total revenues, net incomes, and free cash flows. This is an all or nothing metric. Either all three of these have been growing over the past 5 years, so they're going to be a check, or even if one of them has not, this is going to be an X. So in the case of Lennar Corporation, they've had revenue growth. Their revenues have more than doubled over this time frame. They've had net income growth. Their net incomes have more than 5x'd over this time frame, and they've seen free cash flow growth, with their free cash flows almost tripling over this time frame. This is going to be our first check here on our second metric. Lennar has been able to grow revenues, earnings, and free cash flows over the past 5 years, and that's a strong sign for any business. Next up, for our third metric, we're looking for 5-year earnings per share growth. Now, this is going to help us determine how the business is doing from the perspective of an individual shareholder. The reason this is important is that when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that business. And just because a business can have more earnings or more free cash flows over a set amount of time, if they're issuing shares and they're diluting existing shareholders, that's actually going to counterbalance things, and you won't be receiving as much of the business's profit over time. Your ownership percentage of the business is actually going to be decreasing if that's the case. It's important that we're looking at their metrics here on a per share basis. So thankfully, we're not seeing excessive dilution. Over this time frame, they've more than 4x'd earnings per share, while they've about 5x'd earnings overall. This is still going to be a lot of earnings growth for individual shareholders. It does clue us in that Lennar has been diluting shareholders over this time frame, as their earnings per share growth is not the same as their overall earnings growth, but it's been pretty extreme growth nonetheless. This is going to be our second check here on our third metric. Metric number 4, we're looking for 5-year free cash flow per share growth. This is important for the same reason that earnings per share growth is important. Over a long duration of time, these numbers should be about the same. So it's all right that we're seeing some fluctuations here in just these 5 years. If we would go back farther, we would want both of these numbers, earnings per share and cash flow per share, to be about equal over long stretches of time, over 10 years plus. Having huge discrepancies here is one of the ways that you can actually spot financial frauds. In a case of a business like Enron, they were reporting huge earnings with barely any free cash flow to support it. It's easier for people to fudge the numbers for earnings than it is for their free cash flows. So it's important that we're looking at both of these to see if they line up. Ultimately, we're concerned with the business's abilities to produce free cash flows. So again, over this time frame, their free cash flows per share have more than doubled. This is less than what their overall free cash flows have done. As we saw with their earnings per share, is signaling that Lennar Corporation has diluted shareholders over this time frame, which is not something that we'd like to see. But again, they've more than doubled their free cash flows per share in the last 5 years. So as an individual shareholder, you're getting a lot more cash flow from this company today than you were 5 years ago. This is another check on our fourth metric here. So far through 4 metrics, we are 3 for 4. Then for our fifth metric, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their last 5 years of free cash flows. So we're going to be taking their free cash flow numbers from all 5 years, adding them up, and then comparing them to their net debt from last year. So over this time frame, Lennar Corporation has produced $10.4 billion of free cash flow. This is important because free cash flow is the lifeblood of any business. A business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be worth. A business can use free cash flows to buy back shares, pay down debt, pay dividends, make acquisitions, or reinvest back into the business. Ultimately, free cash flow is the lifeblood of a business, and it's important here that a business is not excessively levered relative to their abilities to produce free cash flows. Businesses that take on too much debt are at a higher risk of failure. They're going to do worse during financial meltdowns, and they're going to be left with less optionality with high debt loads. At the end of their last fiscal year, Lennar Corporation had about $3.8 billion of net debt. Again, over the last 5 years, they produced $10.4 billion of free cash flow. That is more than enough cash coming into the business to pay off all of this debt and then some if they keep doing this into the future. So this is going to be a strong check here on metric number 5. So far, we are 4 for 5. Then finally, for our sixth metric, we want an average 5-year free cash flow yield that's greater than 5% relative to their total enterprise value. Total enterprise value will reflect what it'll be like if Lennar was a private business. It's a more realistic economic picture than market cap because it takes into account both market cap and the business's net debts. Currently, Lennar Corporation has a total enterprise value of $27.8 billion. And over the last 5 years, they produced $10.4 billion of free cash flows. So that means that in an average year, they're producing about $2 billion of free cash flow. When we take $2 billion and divide it by $27.8 billion, that is going to give us a 7.2% average free cash flow to total enterprise value yield. And so this is going to be above that 5% metric we were looking for. This is going to be a check on metric number 6. That 5% yield as a baseline is giving us a slight risk premium to the risk-free rate of the 10-year Treasury bond. Having an average free cash flow yield that's above that metric is going to give us potentially a greater margin of safety there and a higher risk premium overall. Then Lennar Corporation currently pays out about a 1.8% dividend yield, which is almost in line with the market. Here we're taking a look at their dividend profile. A lot of people blindly chase dividends without stopping to consider whether that dividend is supported and sustainable by a business's abilities to produce free cash flows. In the case of Lennar, they're paying out little of their free cash flow as dividends. The business has plenty of breathing room and is in a very healthy posture, paying out very little of their cash flows as dividends. They've been able to grow their dividends in recent years, so this is a strong sign for investors who are considering Lennar's ability to produce dividends as part of their investment decision. So in summary, Lennar Corporation checks the box on 5 out of 6 of our metrics. Their returns on capital are just under that 14% mark we're looking for. They've grown revenues, earnings, and free cash flows over the past 5 years. Their earnings and free cash flows per share are both up. They've had greater growth in their earnings and free cash flow numbers, despite the fact that they've been diluting shareholders over this time frame. Then, based on the business's abilities to produce free cash flows, they are in a very healthy debt posture. They have about $4 billion of net debt on their balance sheet, and they produced over $10 billion of free cash flow over the last 5 years. Then we also found out that the business is trading at an above average and potentially attractive average free cash flow to total enterprise value yield of about 7.2%. So that free cash flow yield potentially makes this business attractive right now. Also, the fact that they're earning above average return on capital numbers, even though it's not to where we want them to be, they're still looking decent as a business. Then finally, also looking at their dividend, we saw that they have plenty of room to spare in terms of where they're currently at paying out dividends compared to what they're bringing in free cash flows. Although that was just a snapshot of the past 5 years and it's no guarantee for the future, things do look good for Lennar Corporation on that front, and it looks like they could potentially keep increasing this dividend if they wanted to. This type of analysis is a holistic and beginning understanding of Lennar Corporation as a business. It is not financial advice, and it is not a buy or sell recommendation of any security. Before making any investment decision, please consult with the properly registered financial and legal professionals. In addition to doing your own homework into a business, please verify any information in this analysis and do your own homework to learn more about Lennar Corporation. I highly recommend reading through their annual reports and diving into their 10Ks. You'll get a deeper understanding and perspective on the business. Once you're done with that, it'll also be helpful to read through their earnings call transcripts to understand the environment that the business is in right now, what management is focused on, and how management is handling capital allocation. So I highly recommend checking those out. So those are excellent resources to learn more about Lennar Corporation. With that said, that's it for today's fundamental stock analysis of Lennar Corporation, ticker symbol LEN. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Lennar Corporation with me, and have a great day.